The research looks at the lending practices of global microfinance organizations. Microfinance organizations are small financial institutions that make loans to poor people in the developing world. The idea behind these organizations is that by extending financial products to poor people, you can actually help them disrupt cycles of poverty. So lots of people are really excited about these organizations, and in particular because they lend to women at a high rate. And this is important because women tend to be poor both around the world and within every country they're in. So the research that I'm doing here starts to look at the relationship between patriarchy and the lending practices of these microfinance organizations. And what we do in the paper is start to look at different ways that patriarchy manifests in a society and how it affects these practices in some counterintuitive ways. So the baseline finding is that when you have a high level of patriarchy in the state, in religion, in the professions, and in the family, so really suppressing women, it makes it harder for microfinance organizations to lend to them for a number of different reasons, mostly due to a difficulty in attracting resources. So tough to attract money, tough to attract actually female customers, and it can also be tough to attract female employees who are actually the people who would make and monitor the loans. Now, what's interesting is we see some countries where patriarchy is stronger in some sectors than others. So you see women being particularly disadvantaged in religion and the family, but they have a more equal influence, a greater presence in government and in the professions. And what we see in these countries is we actually see the greatest outreach to women. And it seems to be that this contrast between high levels of gender inequality in some sectors and lower in others actually creates awareness of women's issues and a motivation to do something about them. So we see lots more local funding support for these microfinance organizations. We also see many more women employees in these organizations, as well as women loan officers. And this appears to be driving the effect of higher levels of lending to women. So the key takeaways from this are one, that if you're in the microfinance industry, it's not enough to pay attention just to economic factors. We have a lot of research that looks at the business environment and the quality of internal practices of microfinance organizations and how this affects their operations and their outreach. But I think what this research really shows is that if you're not taking into account things like patriarchy and other sources of inequality in a society, you're really missing half of the picture. And particularly in these countries where there's either high levels of gender inequality across sectors or low levels where it actually seems to mask inequality in some ways, you need to do different things to actually ensure you're getting the outreach that you want. So when patriarchy is high across the board, probably important for these organizations to start looking at foreign sources of funding because the local support just isn't there. Now, on the flip side, in countries that are more equal across the board, the research really implies that there's probably a need for some awareness and some outreach efforts to actually educate people that women's issues and women's poverty is still important to address. Now, in addition to that, there's a broader implication in terms of thinking about the cultural environment of business and social outreach. So the research that's out there right now tends to focus on cultural or institutional pressures as things that lead business to do good in society. And the rationale is that business is profit-seeking, it's instrumental, and it would not do good things if it were not for external pressures with people saying, we will reward you for doing this or punish you if you don't. Now, what we show in this paper is that's part of the story, sure, but if you really want to understand social outreach of organizations like microfinance or theoretically any kind of organization, you need to understand the sources of the problem that it's trying to address. So if it's trying to address poverty, you need to understand where poverty comes from. If it's trying to address women's issues, you need to understand how these are rooted in society and the different ways that this pushes back against the efforts to actually do good in the world. So the most surprising thing for us when we started to look at this data was the observation of countries that have this more mixed profile of gender inequality. The assumption in the literature to date has been that gender inequality is pervasive in society, and it is to a certain extent. But this has led to an empirical strategy where people are measuring patriarchy with a single measure or an index measure. And the assumption is, the stronger the patriarchy is in society, the greater effect it's going to have. So when we started to decompose this and look at different indicators and see how they didn't always cluster together, this was really surprising. It's a different way of modeling gender inequality in a society. And we were surprised not only to see it in existence, but also to see the kinds of effects it drove in terms of the local support for microfinance. So by far the most surprising thing about the paper. So I think an interesting story in the news that's relevant to this research is the new government in Canada. So the Liberal Party came in after 12 years of Conservative rule, and Prime Minister Trudeau, he has decided that half of his cabinet ministers are going to be women. Now, I personally think this is a great thing, but it initiated a lot of pushback, a lot of consternation with people saying, well, we need to just have the most qualified people, and this is discrimination against men. And this really gets at one of the things in the paper, which is when you have a society that is more egalitarian, at least ostensibly, even though women are still systematically disadvantaged in these countries, I mean, including Canada, which, you think of Canada as this great progressive place, but women still are more likely to be poor and more likely to live in extreme poverty. But it gets masked. And so you get this pushback when someone like Trudeau comes in and says, we need to have more women represented in our cabinet, with people thinking, well, wait, no, this is discrimination against men, when in actual fact, women still are disadvantaged. So this is something that we're picking up in our paper as well as it relates to microfinance. And I think the example of the Canadian government nicely illustrates how it applies in something even as contemporary as, Canadian democracy. So I think one misperception this might dispel is that you can understand gender inequality as a single thing. So the common perception is that gender inequality ranges from strong to weak in a society, and we really start to unpack that and show that it's not always the case, and that when you start to get to this deeper level of analysis, you can actually see some things working that wouldn't be apparent otherwise. In addition to that, and consistent with my last answer, I think that we really show that it's not enough to just assume that because a marginalized group has made advances in society, that they aren't still marginalized in deeper, more fundamental ways. So, even in Canada, women are still poor. Even in the United States, Sweden, and this perception that, just because there's been advances doesn't mean there's still not work to do. I think we nicely push back against that and show, no, there is stuff you need to do. And, especially in microfinance in the developing world, there is a big need, even in ostensibly more egalitarian societies. And if we're not paying attention to this, we're really missing one of the fundamental things that microfinance or any other similar poverty reduction intervention is trying to accomplish. So one of the things that really sets this study apart from existing research that's been done is it's the first that's looked at the influence of patriarchy on the lending practices of these organizations. Research to date, at least the big, large-scale empirical research, has tended to use an economic or finance perspective. And they look at all sorts of great things, and they drive all sorts of important insight, but it misses this cultural dimension. And so by bringing this to the table, we're giving a richer picture of the environment these organizations work in and some of the contextual features that affect the prospects of their success or failure as it relates to social outreach. Now, in addition to that, our study as it relates to gender inequality goes well beyond what's been done so far. So instead of looking at gender inequality with a single variable, we're decomposing it into multiple measures and showing that when you do this, one, you get a more fine-grained understanding of some of the mechanisms that are driving the effects that we're interested in, but also you see things that wouldn't be apparent at all with a single indicator. So all of the stuff about this contrast between high levels of gender equality in some parts of society and lower in others, this is really the action in our paper. It's really what drives the effect. And if you looked at it the way that people have been so far in studies of gender and gender inequality, you'd miss this entirely. We plan to follow up on this by looking at different dimensions of outreach by microfinance, as well as some different forms of poverty and how these work in similar or different ways to gender inequality, and what this means for the actual internal operations of these microfinance organizations. So we've started to expand the analysis beyond just gender inequality to look at other institutionalized forms of inequality and poverty in society, so things based on religious, ethnic, linguistic fractionalization and what this does to outreach of these organizations. And we're also starting to look at how the nature of poverty, be it rooted in gender or other forms of systematic discrimination, affect the balance between social outreach and financial performance of these microfinance organizations. And what's interesting is we're starting to see that the level at which the social and the financial performances become compatible versus pulling apart from each other is really systematically affected not only by the quality of market institutions in a country, but also the nature of poverty. So when poverty is categorical, so it's based in gender, other forms of categorical inequality, the transaction costs are higher for these organizations in terms of the outreach that they're doing, And this makes it much more expensive to try and address poverty and really starts to tweak the level at which you can do sustainable outreach. So that's where it's going. Be interesting to see, what comes next after that.